Welcome back to TechEyeSpy, and today we are stepping into the world of quantum computing, a field that often feels like science fiction until you remember that companies like iRobot, known formerly as Rigetti Computing, are already running these machines today. This episode is your deep dive into what this company really is, what it has actually achieved, and what the next few years may look like for investors watching the quantum race unfold. We are releasing this ahead of their next major development cycle. So if you want a clean grasp of where they stand before the next earnings season, this is the moment to lean in. Quantum computing is full of big claims and bold metaphors, but behind the glitter is a brutally simple truth. Only a handful of companies on Earth are genuinely building the machines that might one day crack problems beyond the reach of classical hardware. Rigetti is one of those names. It is not the biggest, it is not the most famous, but it is one of the few that is actually fabricating its own superconducting qubit chips and shipping real systems to real customers. That alone makes it worth your attention. Before we begin, a quick reminder that TechEyeSpy now has a growing library of books published through Rhubarb Bridge Publishing, available on Amazon and in all good bookshops. If you enjoy the way we unpack the technology, the business logic, and the deeper storyline behind each company, the books go much further. They sit neatly alongside these podcasts as long-form references for anyone interested in tech, investing, or the future of global industry. You can check them out at any time. Now, Rigetti is an interesting case. It went public in 2022 through a SPAC deal. It has spent years refining its superconducting qubit architecture, and in 2025, it began demonstrating the kind of high-fidelity 2-qubit gates that suggest it is closing the gap on the leaders. They are pushing modular chiplet-based processors. They are selling cloud access and even physical quantum systems. And they maintain one of the few true full-stack quantum teams, designing everything from the hardware to the software to the cryogenic control layers. Yet this is also a company under real financial pressure. Revenues remain low, operating losses remain high, and competition remains fierce. This makes their story more nuanced than many investors expect, because quantum is not a race with a single winner. It is a long, unforgiving climb where every firm must prove that their roadmap is both technically credible and financially survivable. In this episode, I will walk you through the company in our familiar narrative, SWOT format. We will explore its strengths and the breakthroughs that justify its existence in a crowded market. We will examine its weaknesses with absolute honesty. We will look at the opportunities in a world that may require quantum acceleration for defense, finance, materials, science, and artificial intelligence. And finally, we will face the threats that could either halt this journey or force the company to merge, pivot, or shrink. By the end, you will have a clear, investor-ready profile of Rigetti Computing. Strengths. The first strength of Rigetti lies in the one thing that cannot be faked in quantum computing. They build their own hardware. Not theoretically, not aspirationally, but physically and repeatedly. Their superconducting qubit chips are fabricated in the company's own facility in California, which means they control the entire production chain, from the raw wafer to the finished quantum integrated circuit. Very few companies on the planet can claim that level of end-to-end quantum capability. It gives Rigetti tighter control over yield, fidelity improvements, and the experimental freedom to rapidly iterate. When you listen to their updates, you notice that the company often talks in the language of materials, chip layers, wiring geometries, and cryogenic tolerances. That is the sound of a team that lives inside the engineering rather than a team waiting for partners to deliver it. The next strength is their full-stack approach. Rigetti is not just selling qubit counts or physics novelty. They built an entire computational ecosystem around their chips. The quantum processors sit inside proprietary cryogenic platforms, controlled by their own electronics, programmed with their own toolset, and accessed through their own cloud interface. This matters because quantum computers are not stand-alone machines. They rely on heavy classical compute support, precision calibration and scheduling, and software layers that make them usable for researchers, developers, and institutions. Rigetti stands out as one of the few companies that tries to integrate all of that into a single coherent workflow. It means that when a customer accesses a Rigetti quantum system, they are touching hardware, software, and control architecture designed to work as one. That coherence is a genuine moat in an industry where fragmentation slows progress. Another strength is the company's determination to pursue modular quantum architectures. In 2023, they introduced a multi-chip processor that linked separate qubit tiles into a scalable module. By 2025, the company had demonstrated a 36-qubit chiplet system with significantly improved 2-qubit gate fidelity. Gate fidelity is the metric that really matters in this field. A system can boast 100 qubits, but if the error rate is too high, the machine is effectively noisier than useful. Rigetti's improvements here are meaningful because they reduce the number of shots needed per calculation and bring the company closer to systems capable of demonstrating consistent quantum advantage in targeted workloads. Their insistence on chiplet designs also places them in line with the future of quantum scaling, where stitching multiple high-fidelity tiles may be more achievable than building one monolithic device. There is also strength in their ability to sell both cloud access and physical systems. Many quantum startups rely solely on cloud revenue. Rigetti, however, has already delivered hardware systems to institutional customers. That is a sign of trust from the scientific community and a practical demonstration that their machines are stable and robust enough to leave the lab. For a young company in a frontier field, that is a credential that carries weight. Finally, there is something to be said for their persistence. Quantum computing is one of the longest and most expensive journeys any technology company can undertake. Many firms have pivoted, collapsed, or quietly exited the field. Rigetti has stayed on its course since 2013, refining the same core architecture year after year. They do not chase headlines or hype cycles as aggressively as some competitors. They talk instead about fidelities, calibrations, roadmaps, and milestone chips. That steady, engineering-focused posture is a strength in an industry where credibility matters more than marketing. These strengths build a picture of a company with genuine technical depth, a clear engineering identity, and a willingness to attempt the hardest problems in quantum hardware. But every strength exists alongside a shadow, and Rigetti's journey is no exception. Weaknesses. The weaknesses of Rigetti begin with the most visible and least avoidable issue. The company is still very small in both revenue and scale compared to the giants developing quantum hardware. Their quarterly income remains measured in low single-digit millions, while companies like IBM and Google commit hundreds of millions per year to quantum research alone. That imbalance does not simply mean Rigetti has fewer resources. It means they must make strategic choices with almost no margin for error. Every fabrication run, every new system architecture, and every step toward higher qubit counts carries real financial weight. Investors must understand that Rigetti operates inside a pressure chamber created by limited capital and escalating technical demands. This leads into the next weakness. For all their engineering ambition, Rigetti has not yet demonstrated a sustained commercial breakthrough. They have customers and partnerships, and they do deliver systems, but none of these have yet created the kind of recurring revenue stream that would stabilize the company's footing. Quantum computing as a whole has not entered its profitable era, but larger firms can absorb that delay. Rigetti must live within it. When a company is burning cash to advance a technology whose commercial timeline remains uncertain, the financial risk becomes very visible. This constant tension between scientific progress and financial endurance is one of the biggest weaknesses for any pure-play quantum startup. Another weakness lies in performance perception. While Rigetti has made meaningful strides in 2-qubit gate fidelity, competitors in superconducting qubits and alternative modalities are also moving quickly. Investors who compare fidelity tables across the industry will see that Rigetti is not yet at the top of the field. And in quantum computing, these margins matter. A small difference in coherence times or gate errors can determine whether a system is useful for real hybrid quantum algorithms or remains limited to demonstration-level experiments. Rigetti's recent improvements are encouraging, but they still highlight the gap that remains between the company and the sector leaders. There is also the issue of scalability. Rigetti's modular chiplet approach is promising, but modular systems introduce their own engineering challenges. Coupling multiple tiles without degrading fidelity, synchronizing control signals across modules, and maintaining uniform calibration all become more complicated as the system grows. The company has shown credible prototypes, yet the path from a 36-qubit multi-chip module to the hundreds of qubits required for practical quantum advantage is not guaranteed. Every additional module multiplies the risk of noise, drift, and instability. Another weakness is market timing. Rigetti went public through a SPAC during a period when quantum investing was driven by optimism rather than performance. Since then, rising interest rates, tighter capital markets, and a shift toward profitability have reshaped investor expectations. Quantum companies that once enjoyed generous valuations now face far harsher scrutiny. Rigetti is caught between technological ambition and market reality, and that mismatch can weigh heavily on investor confidence. Finally, their full-stack structure, while a strength in many ways, is also a burden. Maintaining a cryogenic engineering team, a fabrication facility, a software platform, and a scientific research division all at once is extremely expensive. Larger firms can distribute those costs. Rigetti must sustain all of them simultaneously, which increases operational strain. If one layer slows, the entire stack feels the impact. This interconnected structure demands a pace that is difficult for a small company to maintain. Together, these weaknesses form a portrait of a company with impressive engineering courage, but a financial and strategic environment that leaves little room for missteps. Opportunities. The opportunities ahead of Rigetti are shaped by the simple fact that quantum computing is still in its early chapters. No company has yet achieved fault tolerance. No platform dominates the market, and no economic sector has fully integrated quantum acceleration into daily operations. In a field this young, a company with its own fabrication facility and its own processor architecture still has room to define the rules rather than chase them. One of Rigetti's most significant opportunities lies in targeted quantum advantage. Full fault tolerance may be many years away, but narrow advantage in specific workloads is much closer, particularly in hybrid quantum classical applications, where a limited number of high-fidelity qubits can meaningfully outperform classical simulators. Rigetti's improved gate fidelity moves them into the range where early quantum optimization, quantum simulation, and quantum machine learning tasks could become commercially viable. If the company can demonstrate consistent advantage in even a handful of these areas, it would shift their position from speculative to strategic, opening the door to new partnerships with finance, energy, logistics, and pharmaceutical firms. The next opportunity comes from their modular architecture. While scaling qubits is universally difficult, Rigetti's chiplet approach offers a flexible path to larger devices, without relying on the fabrication of a single massive chip. If they can refine interconnects and maintain high fidelity across modules, they could scale faster than firms tied to monolithic superconducting architectures. This modular strategy also aligns well with future multi-core quantum systems, where processors are built from tiled units rather than one giant structure. Investors watching long-term scalability will see this as a credible route toward the first mid-scale quantum machines. Government demand is another powerful opportunity. Nations are now investing heavily in quantum capability to secure economic and technological independence. The United States, United Kingdom, Europe, and parts of Asia are all funding quantum research, quantum training programs, and quantum procurement. Rigetti, as an American firm with in-house fabrication, is well positioned to benefit from government contracts and strategic partnerships. These contracts can be small in absolute terms, yet transformative for a company of Rigetti's size, stabilizing revenue and allowing more predictable roadmap milestones. There is an additional opportunity in supplying turnkey quantum systems. Most quantum companies limit access to the cloud. Rigetti does both. The fact that institutions have already purchased physical Rigetti systems suggests a market for on-premises quantum hardware that could expand as universities, national labs, and defense bodies seek deeper control over their research environments. If the company can streamline the manufacturing and delivery of these systems, it could create a niche in the hardware sales market that competitors have been slow to pursue. Another opportunity is the growing ecosystem of classical AI. As artificial intelligence scales, the need for new materials, new optimization techniques, and new simulation methods will grow with it. Quantum computing has long been seen as a potential accelerator for these tasks, and even modest quantum improvements could create leverage in a world increasingly constrained by classical computational limits. Rigetti's focus on hybrid computing aligns well with this direction, offering a route to serve industries that will soon reach the boundaries of classical hardware. Finally, the quantum sector itself remains small enough that mergers and strategic alignments are inevitable. If Rigetti continues to make technical progress, even without reaching profitability, it could become an attractive acquisition target for a larger firm seeking internal quantum hardware capability. That outcome would not only preserve Rigetti's roadmap, but accelerate it by providing the resources they currently lack. In an industry where talent and intellectual property matter as much as capital, Rigetti is in possession of both. These opportunities show that Rigetti is far from a marginal player. It sits at a point in the quantum timeline where a few successful engineering steps could elevate the company from a speculative startup to a meaningful contributor to the quantum era. Threats. The threats facing Rigetti are serious, and they begin with the harshest reality in the quantum computing landscape. The competition is enormous, well-funded, and already demonstrating deep technical momentum. Rigetti is attempting to build superconducting qubit systems in the same arena as IBM and Google, companies with budgets that dwarf entire quantum startups. These firms release annual architectures, demonstrate rising qubit counts, and continually publish research that pushes coherence times and gate fidelities upward. When a company competes with giants who treat quantum computing as a generational project, the threat is not simply falling behind. It is being overshadowed to the point where customers and partners overlook a smaller player regardless of its technical progress. Capital markets pose another immediate threat. Quantum computing requires long-term investment, but the financial environment has shifted towards short-term certainty. Higher interest rates, tighter venture capital, and declining enthusiasm for speculative technology stocks all create pressure. Rigetti's share price has been volatile, and the company has depended on additional fundraising to sustain operations. If market sentiment weakens further, or if the company cannot demonstrate milestones that attract institutional investment, the risk of capital shortfall becomes very real. In quantum computing, running out of capital does not delay progress. It stops it entirely. Technical risk is also a significant threat. Even though Rigetti has made improvements in gate fidelity, the superconducting architecture remains sensitive, noisy, and challenging to scale. Many labs around the world are experimenting with alternative technologies, including trapped ions, neutral atoms, topological qubits, photonic systems, and spin qubits. If one of these modalities achieves a breakthrough that delivers more stable qubits or easier scaling, the entire superconducting race could lose strategic relevance. Rigetti would then face the dual challenge of competing on a modality that no longer leads the industry while lacking the resources to pivot into a new one. Another threat emerges from the regulatory and geopolitical environment. Quantum computing has become a strategic asset, which means it attracts both government interest and government restrictions. Export controls on chips, cryogenic equipment, and quantum hardware could limit Rigetti's ability to sell systems internationally, especially to markets where demand for on-premises quantum devices may be rising. Larger firms can navigate these environments with legal and diplomatic support. Smaller firms often cannot. Any tightening of regulations around quantum technology could restrict Rigetti's customer base at exactly the moment they need to expand it. A subtler threat is the pace of expectation. Quantum computing has been celebrated for years as the next great technological leap, yet real-world applications remain limited. If broader industry enthusiasm cools, or if timelines for practical quantum advantage extend further than expected, companies dependent on external excitement to secure funding will face increasing pressure. Rigetti must live in the gap between scientific progress and public perception, and if that gap widens, investor patience may shorten. Finally, there is the existential threat of consolidation. The quantum sector will not support a large number of hardware companies indefinitely. As the field matures, the likely outcome is a handful of dominant players and several supporting firms. If consolidation happens sooner than expected, Rigetti may be forced into a merger from a weaker negotiating position, or worse, find itself edged out by firms that can offer customers greater stability and larger roadmaps. These threats outline the narrow path Rigetti must walk. It is a company with genuine engineering capability, yet it operates in a domain where every advance demands more capital, more stability, and more time than most startups can sustain. Conclusion: Rigetti is one of those companies that sits at the uncomfortable intersection between extraordinary ambition and unforgiving reality. On one side, you have a team that builds its own superconducting qubit chips, runs its own fabrication line, and continues to advance the fidelity and architecture of its quantum processors year after year. That alone places them in rare company. Their modular chiplet strategy, their willingness to sell physical systems, and their commitment to a full-stack quantum ecosystem all suggest a firm that genuinely wants to shape the future rather than simply participate in it. On the other side, you have the scale of the challenge. Quantum computing is not a field where modest resources guarantee modest success. It demands precision engineering, deep pockets, long timelines, and unwavering investor patience. Rigetti has the technical courage, but must continually fight for the capital required to keep pace with rivals who operate at national scale. Their roadmap is ambitious. Their recent fidelity gains are encouraging, and their modular approach gives them a path that could pay off, but none of it removes the risk that the company will need more stability than the market is willing to provide. For investors, Rigetti represents a concentrated form of the quantum investment thesis. High risk, high uncertainty, and high potential. If their technology matures in line with their roadmap, even a small breakthrough could revalue the company dramatically. If the sector accelerates beyond their current reach or funding tightens before their next milestone, the climb becomes much steeper. This is a company worth watching closely, not because it has already won the race, but because it continues to run it with more determination than its size would suggest. As always, thank you for joining me for this TechEyeSpy deep dive. If you want to explore more of the technologies shaping our future, the full library of TechEyeSpy books published by Rhubarb Bridge Publishing is available on Amazon and in all good bookshops. They are the perfect companion to the podcast, each one a detailed guide into the industries that will define the next decade. Until next time, keep learning, keep questioning, and keep studying the companies that will write the next chapter of our technological world.